Welcome to DeFi Crypto Today. Our topic today is DEX Finance and their upcoming DEX Money Market, which is going to launch soon. I believe it's about a week from now. This is a very interesting project. It's quite new, but the team has been around since last year. They started with DEX IRA. And they were KYC last year when they started this. They started in July and they were KYC'd in November by Solid Proof. So we can see their certificate of compliance. This is coming straight from the Solid Proof GitHub. DEX IRA, basically at that time, was their first product, but it's going to be integrated with DEX Finance, and it's going to be part of their money market and so on. So basically, it worked like an investment fund. The tokens, the DEX tokens, basically represented a portfolio that was generating income. You could select the type of token you would receive as income. So you could receive BNB if you wanted to. By default, that's BNB. Or you could receive stable coins like BUSD or any of these other tokens that were available. All right. So, and that's still ongoing. That project is still working fine. And now it's going to be integrated in DEX Finance itself. So we're going to have a look at the project that's going to be launched there, Money Market, if we have a look at it. So the Money Market itself is saying that it's based on Tomb does not give it justice, okay? They changed so many features. They added so many features. And it looks like a Tomb fork on steroids. Okay? It's quite different. It has a ton of very exciting features, and we're going to go through some of that today so that you better understand what the project is about. So basically, they say it's an algorithmic protocol with yield generating that's auto-compounded strategies and ETF rewards. We're going to explain what this means today. So the protocol is very unique, and it has a single regulatory pool which controls the price of the USDEX. So USDEX is the main token, and when it's based back to the USDC, okay? And if it's above TWAP, then when you hold DEX shares, it's going to generate USDEX, okay? But instead of paying you your rewards in USDEX, they created another token that's called DEX ETF, okay? And that's how you're getting your rewards. So it's not diluting the USDEX too much. USDEX gets emitted, but instead of you receiving USDEX, you're going to receive DEX ETF, which you can then sell, okay, or keep and reinvest. They've got all kinds of mechanisms, and most of the tasks are fully automated, which is really nice if you want to save yourself time and trouble, okay, and maximize your earnings easily. So it's meant for, how can I put this? Experienced traders will like it because you can make a lot of money with this. And there are many ways you can make money with this. And we're going to explore some of that. And novice crypto investors will like this also because it's so simple, okay? You don't have to move your funds around. The strategies are developed, are written in the protocol itself. You just choose the strategies that you want, from very conservative to super risky. Okay, obviously you're going to get different yields according to the strategy you're going to choose, but at least, you know, if you're very conservative and you don't want to take too much risk, then they offer you a package for that. And if you want to take more risk and get more rewards, and they offer you packages for that as well. So we're going to see that. So it's very, very interesting. It's not your average Tomb 4 by any stretch of the imagination. They've done a lot of work in here, okay? The website also is very, very polished. Okay, it's definitely not an average tomb fork at all. All right, so they have, what they did is that they removed, most tomb forks have 3 tokens. The third token is a bonding mechanism, which in many instances just does not work very well. Okay, on some protocols they manage to make it work, but not all of them. Most of them it's not working. The bond is supposed to bring back the price of the token above TWAP, but typically after the token has been pushed below TWAP, it just stays there and your bonds become useless. So they avoid this because the protocol itself is designed to bring back the price of the token above TWAP. So it's not, it doesn't wait for investors to push the price of the token up. It does it itself. Okay, it saves that trouble. All right, so that's new. That's very innovative. It's very interesting. All right, so so these are the 2 basic tokens, USDEX and DEX Share. These work pretty much like tomb tokens. Okay. You stake this and you earn this, okay? But the way you're getting paid is through the DEX ETF in this case. So that's quite different. All right, so let's look at the main features. So auto-compounded strategies. So they added multi-step auto-compounded strategies which enable investors to simply stake a strategy and receive a single receipt token rather than manually having to navigate in and out of multiple farming and staking pools. So this is very convenient. They make your investment process a lot easier because everything is compounded automatically. Everything, like the tokens are bought and sold and reinvested automatically. You don't need to worry about it. Okay, saves you time and headaches and everything. It's done for you. And what you receive, as they say, is a receipt token, a single receipt token, which is the ETF, the DEX ETF token. So we've built in a portion of the emissions to be distributed in a third currency, the DEX ETF, thereby relieving some of the sell pressure caused by a high APR percentage. A portion of the ETF fund will include DEX IRA along with money market tokens. So the DEX IRA token is going to be invested, okay, inside the DEX ETF token as part of a portfolio. So why is it called DEX ETF? Well, it works like an ETF on the stock market. An ETF is an exchange-traded fund which invests in multiple stocks on the stock market. Well, in this case, the DEX ETF invests in multiple cryptocurrencies, including the DEX IRA and several others, okay, which we're going to have a look at. And basically, it works like an investment fund. It's a diversified investment fund. So you stake your DEX shares, you earn USDEX. A part of them are invested, are paid to you in ETF, in DEX ETF tokens, which are in an investment fund, essentially. Okay, at that point you can decide, okay, you sell this or you reinvest some of it or whatever. Okay, now they have also a different kind of bonding mechanism. It's not the tomb fork bonding mechanism. This is something taken from Olympus DAO. So basically, it allows you to buy money market tokens at a discount. And this increases the amount of money that's in the protocol treasury. Okay, so the protocol has protocol-owned liquidity. All right. So, and they're going to have a pre-selection of currencies, including DEX IRA and DEX ETF, thereby creating constant buy pressure for those tokens within the DEX ecosystem. So everything has been designed to try to push the price of their tokens up, okay, so that you don't lose value, you gain value over time with this. Okay, so the purchase bonds vest over a period of several days, and then you can have them and invest them in the system again. All right. So let's have a look at the system in greater detail. Here they've got a cute little video. They've got a YouTube channel. I'm putting the link for all this stuff in the description below. So if we have a quick look at this, I'm not going to play the whole thing, but I'm going to turn off the sound. And you're going to see this is what the Money Market app is going to look like once it's released. Okay. So you're going to have all kinds of investment choices, different farms, and so on, with different kinds of risks. Okay. And they show you here the auto-compounded strategies. And you have for very conservative, risk-averse, up to gunslinger for people that want to take a lot more risk. Okay. So it's a very advanced system. It's very polished. They have a lot of innovation in there. It looks quite interesting. So that's launching soon. All right. So the DEX Money Market is an algorithmic reserve protocol with multi-step auto-compounded strategies and ETF rewards. So we talked about that. Now, what's interesting here is that basically what they're doing is that they're using code that was invented by several other protocols, including Comme Finance, Olympus DAO, Balancer, and Beefy Finance. So as I said, it's not your average tomb fork by any stretch of the imagination. They're really trying to pull in together the best of these 4 different protocols to try to make it easy for you to invest and get as much return as possible. All right. So, and as they say here, it's a truly unique multi-token protocol and it empowers users by simplifying the advanced trading strategies employed by experienced investors and promote growth through low-risk algorithmic trading model. All right. So the USDEX is the native token of the money market protocol. The built-in stability mechanism within the protocol aims to maintain USDEX pegged to 1 USDEX equal 1 USDC. So it's going to try to do that. It doesn't mean it's going to be exactly 1 USDC valued at 1 USDC all the time. It's going to be a little bit up, maybe a little bit down, but the system is supposed to bring it back up automatically. Okay. All right. So what's different about this this fork, right? So maintain the price of the peg token without putting investors at risk. Okay. DEX Finance uses only a regulation staking pool. In the system, the price of the peg token is regulated by smart contracts, not by investors. So it's not at the mercy of mercenary investors that just want to suck all the value out of the protocol and then make the token tank. Okay, it's not like that at all. The protocol itself tries to maintain the peg. Okay, the protocol's underlying mechanism dynamically buys and sells the supply of USDEX, pushing the price up or down relative to the price of USDC. So it's done automatically. The protocol does it itself. So this allows for less experienced investors to participate in high-yield farming. Experienced investors eat and sleep and breathe crypto, they say. They spend countless hours charting trends and so on. But for beginners and part-time investors, you don't have time to do that. Okay, and it's complicated. It takes time to learn and so on. So here, what they want to do is help new and less experienced crypto investors. They created a new ecosystem to empower users by simplifying the advanced trading strategies employed by experienced investors and promote growth through low-risk algorithmic trading model. So we're going to see some of that. So as I said earlier, they prevent mercenary yield farmers from pillaging liquidity pools. So they don't want people, to just suck out all the value out of the liquidity pools on the project, which happened many times before on various tomb forks. Okay. So here, so what they're explaining here is that on average DeFi projects, typically they try to attract investors by providing insanely high returns. And unfortunately, that backfires, and it attracts sharks and whales and things that are just there to grab as much profit as possible and sell as fast as possible. So they're going to try to buy the tokens, get the yield, and dump the token as soon as they can. And that typically signals the death of the protocol. So here, we're going to, these are the tokens that are going to be used in the money market. So you have the USDEX, which is designed to be used as a medium of exchange. And the built-in stability mechanism of the protocol aims to maintain the DEX pegged to one USDC token. As I explain here, don't expect that it's going to be priced exactly at one USDC all the time, okay? It's going to fluctuate a bit, okay? But the system is designed to bring it back to peg. DEX share. Okay, the DEX shares are one of the ways to measure the value of the money market protocol and shareholder trust and its ability to maintain the USDEX close to peg. DEX shareholders have voting rights or governance on proposals to improve the protocol and future use cases within the money market protocol. Then you have the DEX ETF, which represents the average cumulative value of a basket of selected cryptocurrencies, and is used to reduce the sell pressure on USDEX. So it serves two purposes, okay? So you stake your DEX shares, okay, and you earn USDEX. And typically that's all there is on a regular tomb fork, because you earn the USDEX and you claim it, and then most people would just, like, you know, swap it for something else and pocket the profits. In this case, instead of being paid in, you earn USDEX, but instead of being paid in USDEX, you get paid in DEX ETF. Okay, so a part of the earnings are paid to you in DEX ETF. The DEX ETF represents a basket of cryptocurrencies, so it's a portfolio of cryptocurrencies. Okay, and you can reinvest that or cash it out. Okay, and because you're getting paid in a third token instead of USDEX, that relieves the selling pressure on USDEX, and that's why they figured that this would help it stay at peg to one USDC. Okay, because if you get paid in USDEX and then everybody sells USDEX, it's going to put too much pressure on the price of USDEX, and it's going to go below TWAP, and it's going to be less than one USDC. Okay, so basically you're getting the two purposes. Once you're getting an investment portfolio that's already diversified, so low risk investment, and you're helping maintain the value of the USDEX. So during epoch expansion, the protocol mints USDEX, which is then collected and converted into DEX ETF tokens prior to being redistributed proportionally to all DEX shareholders who have staked their tokens in the regulation pool. You see? So that's how it works. Now, they also have protocol on liquidity. That's something that's taken from Olympus DAO. Okay. So it helps the protocols build up their treasury, and with that they can do all kinds of things like further investments and increase the value for the token holders. Okay, so in order to incentivize users, money market tokens can be purchased at a discount in a process called bonding. Bonds have a vesting period to prevent users from selling all the discounted tokens at once for a quick profit. The list of bondable tokens include currencies such as DEX IRA and DEX ETF, and there's going to be others as well, ensuring consistent buy pressure for native tokens within the ecosystem. So here have USDEX bonds or DEX share bonds. So what does this mean? This here, you're paying for your USDEX tokens with DEX IRA or DEX ETF, and you're getting a discount on the USDEX tokens. Same thing here. Here you want to buy DEX share tokens at a discount, and you're paying for them using a DEX IRA or a DEX ETF. Okay, so up to you. You can buy these tokens at a discount, the USDEX at a token, tokens at a discount, or DEX share tokens at a discount. All right. So liquidity is necessary for the protocol's existence. Without it, the trading death is impossible. To incentivize this, they can offer substantial rates in farming fees. Liquidity providers come attracted by high rates and are willing to take on the risk of liquidity provision in exchange for yield. However, the common phrase total value lock is quite a misnomer. Liquidity deposited in yield farms can generally be withdrawn at any time, and for that reason should be considered mercenary. The vast majority of farmers are chasing only the highest yield, not the best project. Should rewards ever fail, their departures are sure to follow. And that's what you see all the time on so many projects, ToomForce or others. People chase the yield. Once the yield is gone, they're gone too. And they sold their tokens, and that pushed the price of the token down to as low as possible. Bonding, on the other hand, offers the sale of an asset with funds deposited into the treasury, which can then be used to buy back liquidity or collateralize an asset. So what they're doing with this is that they're building up a treasury, and if the price of USDEX goes too low, they can buy it back, okay, and bring back the price up. That's the point. PEG regulations. Similar to other seigniorage-based algorithm protocols, basically tomb forks, the expansion supply of USDEX is determined based on the time-weighted average price, the TWAP, of USDEX. At the beginning of every epoch, if the TWAP is greater than 1.01, new USDEX will be minted at a maximum expansion of 4.5%. So it's not going to be unlimited, right? They want to be able to control the expansion period. They want to control how many USDEX get emitted, okay, get minted. All right. However, rather than being immediately distributed to regulation pool stakers, the new supply of USDEX is sent to a smart contract where it is sold based upon specific parameters and only after calculating factors such as price, circulating supply, and treasury-backed assets. So again, the protocol controls the distribution of the tokens, okay, to ensure that it doesn't crash, that the price doesn't crash. As the USDEX is sold off, it is then converted out into our DEX ETF tokens and redistributed back to regulation pool stakers, thereby relieving sell pressure. So we talked about that. So although you're minting new USDEX tokens, they're sold and used to buy DEX ETF tokens, which are distributed to the stakers. You're not getting the USDEX, you're getting the DEX ETF tokens instead. This way, there's less sell pressure on USDEX, and it's going to maintain its peg better. All right, so there are multiple strategies that can be used here to ensure that investors make as much profit as possible. And here to explain how it's done. Now, one thing that's quite nice is that investors are encouraged to set automatic take-profit percentages that are distributed each cycle. So you're going to receive some DEX ETF tokens, okay? And what they encourage you to do is select a percentage of that to be sent to your wallet, okay? And the rest is going to be reinvested in the system. This way you maximize your profit, and it's done automatically. You don't need to worry about it, okay? You don't need to waste time doing this, pay gas, and so on. It's all done for you. And as we're going to see, you can go from very conservative investment strategies to very, very risky and high reward strategies, okay? So if you want to go degen, you can. And if you want to be very conservative, you can as well. So the strategies are based on risk levels that are determined on the allocations between each pool. Our unique method of peg regulation assumes that the cost of USDEX is always stay within relative proximity of the price of the USDC, thereby drastically reducing the risk of loss due to price action. So you shouldn't have a lot of impermanent loss in there at all, okay? As they say here, because the USDEX is pegged to USDC, the risk of impermanent loss is nearly eliminated, okay? Because there should be just tiny fluctuations between the two tokens, okay? So you're not going to have any, you don't need to worry too much about impermanent loss at all. Given these two factors, one can enter the USDEX USDC farm at any time with limited risk. Converting the price of DEX shares is meant to fluctuate in price and thereby carries more of an inherent risk with greater upside potential. So they offer 6 different kinds of strategies with different risk levels. So we go from very conservative strategies where most of the tokens are invested in USDEX USDC farm. Okay, this one, the big dark area here. And because they are pegged to a dollar, there's no impermanent loss. So it's very, very safe. Okay, the market can go up, the market can go down, the market can go sideways. You're not going to lose capital here. Okay. And a smaller percentage is invested in riskier strategies that are going to generate more income for you. Now, you have the second level is risk averse. So you don't like too much risk, but you think you can, you want a greater return. Here, risk tolerant, same thing. You want more return. You still want to keep enough safety in there. Okay. Here, these are more risky strategies, all right? This one is balanced. So all 3 tokens, all 3 pools are invested the same way. And then you have an aggressive strategy. So here, you're putting more money in an aggressive, risky strategy. And this one, well, it's called Gunslinger. So you don't care about stability. You just want the highest possible yield. No matter what, okay? Problem is, you may experience some capital loss if the market goes against you. So be careful, all right? But as you can see, these are just about, you know, every possible risk level that you can expect, okay? And the strategies are all designed for you. You don't need to worry too much about anything. What's interesting, they use a zapper. Okay, so you just put in 1 coin and it's going to fill up the strategy for you instantly. We're going to have a quicker look at that in a moment. All right, so this is what the dashboard is going to look like. We can't see too much right now, but I've got this a preview. So this is the preview. It's going to look a little bit like this. Okay, so we got the 4 main tokens. You got the USDEX, you got the DEX share, the DEX ETF, and the DEX IRA. Okay, and we're going to be able to farm them. So here they got 3 sample farms, but there's probably going to be several more. Okay, so you got the USDEX USDC farm, and as I mentioned, there's a zap in button. Okay, so I'm guessing that if we use the zap in button and we've got USDC in our wallet, it's probably going to create the LP pair and it's going to stake it automatically. Bingo. Okay, same thing here. You got the DEX share BNB pool. So if you've got BNB in your wallet, you would zap in and it's going to create the LP pair automatically for you. And if you already have a DEX share, you could, or probably if you have BNB or USDC in your wallet and you want to just stake some DEX shares, you could use the zap in. I think it would take those tokens. All right. And here again, we have a closer look at some of the strategies. Okay, we saw earlier that there's probably going to be 6 of them, but they show you the 3 main ones. So we've got the most conservative strategy here, which is invested mostly in USDEX and USDC, and with 5% in the DEX share BNB pool and 5% in the regulation pool. Okay, now here, this is the balance strategy. We get 32% of each, and the gunslinger strategy, which has the highest risk. Okay, but potentially the highest reward as well. All right, so it depends on your risk tolerance. Okay, if you like a lot of risk, then you're going to tend towards the gunslinger. If you hate risk, you're probably going to want to stay conservative. And if you're in the middle, well, you can try balance or some of the other strategies that are close to this. All right, what else we got? Oh yeah, the DEX pad. This is where they're going to launch new projects, including the USDEX and the DEX share tokens. But they're planning to use this as a platform for launching several other projects. And they're probably going to collect some fees doing this. So again, that would be good for the protocol. And if it's good for the protocol, it's good for the token holders. They have new ways of earning income. All right, as we saw earlier, they are in the news. These guys are in the news. If you look at the main page here, they have articles. You can click on these links and they'll bring you to the articles. You've got articles on Bloomberg, Business Insiders, Yahoo Finance, Yahoo News, NASDAQ News, Coin Speaker, and MarketWatch. So these are some of the articles. This one explains DEX IRA. And this one talks about the new DEX Finance launch, which we talked about today. Same thing here at NASDAQ. Okay, they explain in detail what we talked about. All right, now definitely follow them and turn on the notification on Twitter, because they have several announcements. Right now, they've got a new airdrop whitelist. Okay, they've got 5,000 USDEX in prizes for people that are on the qualified whitelist. Okay, so click on the link and see if you can participate. And same thing here. Check out the announcements on their Discord. This is where you're going to get the latest. Here they just had an AMA, I believe, yeah, just a few hours ago. And yeah, they talk about their AMA. And this is yesterday, 9 days until public launch. So we're 8 days away from the public launch. You check these out. Ask them questions in the general chat as well. Okay, and they're going to answer. All right, so that's it for this video. If you like this kind of stuff, please like and subscribe. Don't forget to ring the bell. Download the free book. All you have to do is put your name, your email address, and hit the submit button to get a big fat button that says download the free book. And if you missed that free book, that's okay. We're going to send you an email with another button that says download the free book. And if you don't want to download the free book, you can go to Amazon, pay $5.99 to Jeff Bezos, and Jeff will send me $1. See ya.